Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're talking about one of the largest stakes I have in my portfolio. It is currently the fourth largest position in my portfolio, and some big news just came out of it. We're talking about Visa. And Visa just abandoned their takeover to acquire the company Plaid after the DOJ raises antitrust concerns. Now, even though they are canceling this, I wanted to go over this and why I'm still keeping my position in Visa, and it is still going to remain one of the largest positions in my portfolio. I'm going to talk about how will be affecting the company through these two articles right here. And then next up, I also just want to talk about Visa in general. It's a good time for me to talk about this company because a lot is happening. They're about to have their annual shareholder meeting. They just released their annual report. So I just want to talk about basically what the company does. I think a lot of people that invest in this company that are beginners and don't really know what the company does, or just a basic everyday consumer, doesn't truly understand how Visa works. They're not a credit card company that is charging people a lot of interest to use their credit cards. That's not it whatsoever. So I want to go over the company, how they make money. I want to give an update on their annual report for 2020 because it was just released here. And so I want to go over that and some of the bullet points behind it. So I want to go over some things like the balance sheet and some of the new processing payments that the services have to offer. But overall in this video, it's going to be a fun one, guys. If you're not familiar with me, if you're new to my channel, my name is Jordan. I'm the Millennial Investor, and I track my annual and monthly dividend income through these top two charts right here with these 24 stocks that I currently listed, including Visa, on this left-hand column right here. And then on these bottom two charts, I track my portfolio value and my monthly YouTube income. So if you want to tune in and subscribe, I'd invite you to do so. And if you want to get signed up with the brokerage that I use, that's how I trade all 24 of these stocks right here. And if you want to get signed up with M1 Finance, the name of this brokerage, you can get $30 for signing up. That's right, $30 free just for getting signed up. All you got to do is deposit $100 to the platform once you get signed up and use my link, which is down in the description right here. So go ahead and download this link, sign up, and get 30 bucks, and you will help me and you'll be supporting the channel as well. And we did get one more this morning, and we are now up to 70. And that is one of my main goals for 2021 is to get 100 referrals in 2021 right here. So if you can go ahead and help me out and get that number to 100, now is the perfect time since now the beefed up amount is $30 instead of the regular 10. So thank you guys so much for tuning in, and let's go ahead and get into the video. So Visa is the fourth largest company in my portfolio. I'm currently up 21.5% on it, or $51.63 worth of profit. Now, I would have much larger gains in this company, but I keep on averaging up my cost basis. Because right now, as I'm highlighting it right here, I own it at $189 a share. And when I was originally buying this company, well, here, let's go ahead and check it out. Let's go to my activity. Let's search Visa. And let's go to the very first record. Okay, right here, Visa. I originally was buying Visa at $155 a share, and today I'm still buying shares up in the 200s. So it's a much higher than what it used to be, but at Visa, even in the $200 a share range, I'm still buying this company like crazy. And the one thing that's really interesting about this company is that if you know me, if you look at these 24 companies listed right here on the left, these are all dividend companies. All of these ticker symbols are high-paying, high-yield, high-growth dividend companies, and this is the only stock in my portfolio that I own that is strictly mostly for growth, that has almost nothing to do with yield, because the yield with this company is very unimpressive, almost 0.5%, much lower than any other stocks in my portfolio. But the reason that I continue to own this company is for the long-term opportunity ahead of it. And now before I start getting into the long-term opportunities and the business model, I want to go over this piece of news that was just announced. They abandoned their takeover of Plaid. By the way, I know some people call it Plaid. I'm pretty sure it's Plaid. I always call it Plaid, but regardless, they were a company that verified a lot of the transactions and made sure a lot of consumer information was confidential for a bunch of large Fortune 500 companies out there. And about a year ago, almost exactly, actually, what's today? Oh, today's the 13th I'm filming this, so exactly a year ago today, you guys should be watching this, I believe, on the 15th. But on January 13th, 2020, Visa announced that it planned on acquiring Plaid in a deal worth $5.3 billion, roughly double the startup's last private valuation. The company's API software, often referred to as the plumbing behind fintech companies, lets startups connect to users' bank accounts. The company says it integrates with more than 11,000 banks, and one of the financial institutions it uses as well is M1 Finance. When I first got signed up with M1 Finance, they use Plaid as well, and they can verify your bank and your consumer information in about, I don't know, 30 seconds, maybe less, and it's really handy to have that type of company be able to process that information when it would normally take 3 to 5 business days to normally set up your information. But Plaid was a great company. I think it was an awesome opportunity for Visa, and it just made a lot of sense with the type of company that they are. But the Plaid CEO, Zach Parrott, said in a statement, the company will work with Visa as an investor and partner going forward. And then I'm going to switch over here to this Market Watch article, and then it said that as well. I don't have any worries that we will have the ability to do what we need to do, whether organically in partnership with Plaid or with lots of other players or by buying things, he said. And if we scroll down here, it came up with a really interesting point. Since the acquisition announcement in January 2020, Visa completed 2 separate debt offerings totaling $7.25 billion, largely to fund this deal, he wrote. If they used the $5.3 billion that would have been used for Plaid instead to repurchase shares, we think it could be a 0.5% accretive to annualized earnings per share. Now, what's interesting here is that they now have an extra $7.25 billion worth of funding through the 2 debt offerings that they had to offer. And if you look here in parentheses, the average interest rate was 1.9%. 1.9%. And before the recession hit, this company was still growing revenues and profits in the double digits, 10, 11, 12, 13%. So when they can offer debt at a whopping 2% and then turn right around and then grow the company in the double digits, this is an incredible opportunity for Visa. Now, whether or not Visa uses this money to increase the profits for the company, to buy out other smaller players or expand the business, or they use it for share buybacks, I don't really think there's a wrong answer here. I'm not a huge fan of share buybacks, but when a company is this profitable, when it's growing this fast, share buybacks can help this company's stock price. And me as an investor, that's not something I'd really hope for, but it's not something I'd really be against either. I would much rather have this company buy out another large player like Plaid, for example, but regardless of what they do with this extra cash, which by the way, I'm about to show the balance sheet in here just a minute, I think this is an awesome opportunity for Plaid. I don't like that they did miss out on the opportunity with Plaid, but they still have billions of dollars to help grow that company, and they financed it at an incredibly low interest rate. Even if they financed it at 4%, 5%, 6%, I still think this gives Visa a lot of opportunities for growing room in the future. Now, before we get into the annual report and all that stuff here in a little bit, I want to talk about how Visa makes money, because a lot of people that aren't too familiar with it, a lot of people see them on their credit and debit cards, and they don't really know what the company does, how the business works. So I found an article here by the Motley Fool that breaks it down quite easy. It says, because a lot of confusion exists on this point, let's start with how Visa does not make money. As with MasterCard, which by the way, MasterCard is really one of the only competitors to Visa. One of the reasons why I love this company is because they're one of the only competitors in the space. Visa and MasterCard, they're the 2 big dogs, and in my opinion, I don't think anyone is going to be taking them down anytime soon. Consumers don't actually borrow money from Visa when they use their credit cards to make purchases. Therefore, when consumers make credit card payments, Visa does not profit from the interest rates charged by the card. The money being borrowed is from the card issuing financial institution, such as JP Chase or Capital One, or any other big credit card distributors like these 2 big names right here. And thus, all interest expenses paid on the Visa branded credit card goes to the card issuer. There are pros and cons to this model. The obvious downside is that consumers pay a lot of credit card interest each year, and none of that revenue goes to Visa. The positive is that Visa faces none of the default risk that comes in from lending money. For what it's worth, Wall Street tends to assign much higher valuations to companies that do not face loan default risk. As a result, MasterCard and Visa's price-to-earnings ratio are easily more than double of credit card issuers' valuations like American Express, Capital One, and JP Chase. Now let's go ahead and break this down real quick. I want to give 2 scenarios. Let's go ahead and say John has a credit card and Billy has a credit card. Now let's say John goes out and he always pays his bill in full, he always pays it on time, and he uses his credit card for all of his daily purchases. John is constantly swiping his Visa credit card for buying food, buying groceries, paying his utility bills, buying things off of Amazon online. Visa gets paid immediately the moment he uses that card. Visa gets tiny little fees for every single transaction that he does, and it doesn't matter what happens after that point. Visa has already gotten paid for using the Visa network, for using the Visa system. Now let's say Billy over here on the right side, let's say he has a credit limit of $1,000. And let's say Billy goes online and goes on Amazon and racks up $1,000 worth of purchases using a Visa credit card. Now that thousands of dollars worth of purchases, the small percentage that Visa gets to keep, they keep that pure profit. They don't have hardly any expenses other than just to operate the company, but that is almost pure profit for, once again, just using the Visa network. Now let's say Billy did not have that $1,000 in his bank account. He is still owed that money towards the bank, the financial institution that he got that credit card from, and then that financial institution, we'll use the example, we'll say JP Morgan Chase. JP Morgan Chase has to try to get $1,000 back from Billy. If the $1,000 is not retained back from Billy, then JP Morgan Chase is out that $1,000. They can do some little things like go after his credit and charge him a bunch of fees, but at the end of the day, there's really not a whole lot JP Morgan Chase can do with a small credit card limit like that. But Visa, it doesn't matter whether or not they pay off their credit card. When they use their credit network, Visa gets paid every time. Doesn't matter if they pay it or not. So this is really good for Visa because while they don't get as large of the margins as say like a credit card does charging 20-30% interest, Visa has virtually no risk anytime someone uses one of their payment systems. Anytime they use a Visa credit card, they get paid no matter what, and that is an awesome model, and Visa does not have to worry about all the pains and hassle of keeping up with loan default risk. And now I want to go here to this next paragraph, the four-party payment model. Visa essentially acts as a middleman in a four-party payment model, which, besides Visa, includes a credit card issuing financial institution, the merchant, and the acquirers. According to the company's 10-K report, its annual filing with the SEC, every time a card is issued, Visa collects fees. As tiny slivers taken out of each transaction amount, it can vary depending on the card issuing bank and where it's used, in three main ways: service revenues, data processing revenues, and international transaction revenues. Last quarter, more than 90% of Visa's revenue was generated through these three streams: service revenues, data processing revenues, and international transaction revenues. Now let's go ahead and close this out, and let's go ahead and go to the 2020 annual report that Visa just reported. And I want to show you some quick bullet points right here. So let's go ahead and look at their annual report right here, and this is the 2020 report. And if I scroll down to one of their top pages right here, I want to show you some of their operational highlights. So if we go ahead and look at some of the bullet points right here, we will look at some of their operational and finance highlights, and let me tell you that some of the numbers of this company is incredible. The total payment volume was 11.3 trillion up to 11.6 trillion, and then went down slightly back to the 2018 numbers of 11.3. A very slight downturn, not very big whatsoever, but considering that unemployment was skyrocketing, businesses were shut down, and then overall we just had a pandemic and horrible economic numbers, that is not bad considering the economic environment that Visa was operating in. We look at payments volume, it went from 8.3 trillion to 8.8 in 2019, and then it stayed flat to 8.8 in 2020. So not bad once again considering the environment in 2020. Total transactions processed. Now these last two columns, the transaction process and cards issued, are good news. This is what I like to see. Now in 2018 and 2019 and 2020, both of these categories grew. So even though the economy was bad, they still have more cards that can be processed throughout Visa's networks, and more transactions were also used. So that means that A, the cards being issued was higher, and then B, the people that already had the cards were using the card more often. So the transaction process was 124 billion, and then in 2019 it went to 138 billion, and then in 2020, even throughout the pandemic, even with people being forced to stay home, they went from 138 billion up to 140 billion. So an increase there that is pretty dramatic. Cards issued went from 3.3 billion to 3.4, and now they're up to 3.5. Once again, more cards being issued out there, and now that you have 100 million different cards being issued throughout the country and throughout the globe, that is the opportunity for more transactions, more payment volume, and then more profits for Visa. And then if you look at some of these, I won't go over these one by one, but you can see that their net income is still on an uptrend on a 3-year basis. If you look at their operating income, still on an uptrend, operating expenses on a very slight uptrend, almost flat, which is what you want to see obviously on the expenses side, and the net revenues still growing on a 3-year basis. I think 2021 is going to be a big bounce back, and especially going into 2022 as restaurants are fully open back up, as the vaccine is fully rolled out. I think 2022 is when this company is really going to start getting its numbers back up. And then I think in 2021, as a lot of these analysts start to raise their price targets again, as people start to get more bullish on Visa, as once again, like I said, those restaurants and stuff start to open back up and movie theaters, I think that Visa will really start to see a lot of upside in 2021. I wouldn't be surprised if we see Visa break $250, maybe even close to $300 a share in 2021 through the process of buybacks, increased payment volumes, and then people overall just getting more bullish about the stock. Now I want to go ahead and move on here. I want to show this because I've showed this in a previous video before. It says strengthening Visa's role in enabling money movement globally. They are constantly reinvesting into new payment processing systems. In their core business, they have their credit and debit cards, the one we just talked about. They're prepaid and their global ATM. That's where they make the vast majority of their revenues and profits. On the second circle, we have the consumer payments. We are accelerating our efforts to move 18 trillion in consumer spending from cash and checks to digital payments, and that involves engagement, acceptance, and credentials. And then in the third circle, we have the new flows. We are extending our network by enabling our partners to provide people and businesses the freedom to move money however they need, unlocking a $185 trillion market opportunity from peer to peer, business to business, government to consumer, all different types of things like that. And then last but not least, you have the value-added services. Value-added services revenue grew 18% this past year, showcasing the client demand for these services, which include issuing and consumer solutions, merchant and acquiring solutions, fraud management and security services, data solutions, and Visa consulting and analytics, which I think that fifth one is going to be a big one. But when you see all these different opportunities, they still have their core business, which even though their core business might seem like an old boring business, that core business is still growing substantially. And when you see these other opportunities through consumer payments and their new cash flow opportunities and their top icing on the cake value added services, when you factor all this in, this is an incredible high gross margin business that has a very dominant payment system that really is very sticky. A lot of the customers that they have, like JP Morgan Chase and Capital One and the other ones like we mentioned, a lot of them use their services and are very sticky because they have their entire platform integrated with Visa already and they're not looking at changing that anytime soon. So Visa has an incredible business model, a lot of opportunity, and a lot of businesses still captured that they have not integrated in with yet. So Visa has a lot of opportunity, and let's look at how their balance sheet is looking here in 2020. I wanted to highlight two main bullet points. I always like to talk about the cash to debt because in my opinion that is one of the most important factors in a business. If a business is weighted down by a lot of debt, they cannot have a lot of growth opportunities. If they're weighted down by debt, then they constantly have to focus on repaying back that debt. They have to issue debt at a higher interest rate because they're a higher credit risk. But when you have a company like Visa, they increased their cash significantly in 2020 to make sure they could fund their operations. They had 7,800 in cash in 2019. By the way, these are in millions, so basically 7.8 billion. And then in 2020, they increased that to 16.2 billion. So they doubled up their cash position, over doubled up their cash position. And not only that, they increased their total assets significantly from 72 billion up to 80 billion through different things like goodwill, intangible assets, and then investment securities and cash and lots of other things as well. But when you look at things like their liabilities barely went up, only 7 billion. And if you look at their long-term debt, it barely budged. It went from 16.7 billion to 21 billion. Considering that their cash position doubled almost $10 billion, their long-term debt didn't even go up 5 billion. So they're constantly getting more and more cash. They're extremely profitable. They don't have a lot of debt on their balance sheet. And something I wanted to point out, 21 billion in long-term debt versus 16 billion in cash and cash equivalents, they could pay off almost every dime of their long-term debt tomorrow if they wanted to. So they still have lots of leverage, lots of opportunities to buy out smaller businesses or repurchase shares or increase that dividend massive amounts going into 2021, which honestly, I probably expect all three of those things that I just mentioned. So basically, guys, my plan with Visa is to continue buying shares in the 200s. Even if this company went up to $300 a share tomorrow, I would probably still be buying it because this company has such a long-term opportunity over the next 10 years from their incredible business model, and as they find other partners like Plaid to buy out, that will just grow the company even further. So thank you guys so much for watching. I really appreciate it. If you're new to the channel, like I said, I'm going to invite you to subscribe and go ahead and get signed up with M1 Finance because usually the sign-up rate is $10 a person to use this link, but right now it's $30. So you'd help support the channel and you'd also fund yourself a little bit of your investment portfolio as well. So thank you guys so much for watching, and I'll catch you guys next time.